Everybody, I just wanted to get on here and share one of my favorite strategies when it comes to trading options and playing, specific earnings. So, time and time and again, I hear of people trying to play earnings and they end up just losing all of their money because their contracts eventually get crushed because the stock didn't move in the implied direction or didn't move the implied amount that everybody was expecting it to move, which is called an IV crush. So basically, like I said, an IV crush is when the stock doesn't move the implied amount after an earnings day. So, for example, if you wanted to trade Microsoft's earnings, right, and everybody believes that, after the earnings, even if it goes up or down, they expect it to move 5%. And then you buy an option contract the day before out of the money, no matter if Microsoft went up or down, even if it went in your direction, if it doesn't move over 5%, your contract is going to lose value. So today I'm basically just going to show you guys one of my favorite strategies to make, over 100% on earnings. You don't buy the contract before earnings, you actually buy it after earnings. So the contracts are usually cheaper and it's, a better way to make money rather than purely gambling and waiting for stock earnings to drop after hours. So yeah, the basic rundown for this strategy requires you to wait until the trading session immediately after an earnings report and then purchase the options once they lose their value. So I'll show you guys an example of this in a second. So, for this to work, you guys want to find a stock that is relatively flat after earnings. So an example of this is Target. So this morning they opened relatively flat after a decent earnings report. So if I go over here, you can see that Target's earnings report had an implied move of 7.40%, and the previous move was only 1%. So today you could see that it was flat. It only, at market open, it was actually down 0.61%. So it wasn't up or down 7%. And this is why all these contracts got crushed. So if we go to the options chain, we can come down here and we can see that all these options lost 90%, 83%, 70%. So this is where we make most of our money. So we use a strategy like this. I'm going to show you guys. Let's go to this one and remove it so you guys can see. Add it back. Could do this one. Actually, yeah, you could do this one. So you guys can see that Target opened. It opened relatively flat. And you can see that at market open, these were down 73%. But as you can see, intraday, these ran up to $2.25, right? This is over 100% right here alone. So although Target didn't hit its implied move of 7%, you could still make money trading these options, right? So if we come down here, the low for the day was 54. It's $54, right? So if you're able to snipe it and sell at the high, that's $237. That's like 300% right there. Now, this is definitely easier said than done. If you want to find stocks that are going to do something like this, you want to follow the volume for the stock on that certain day. So if we go over to Webull, right, we can see that as soon as the market opened, the highest volume of the day was at market open, right? So if we could switch to this 3-minute time frame right here, once market opened, you could see that the buyers were stepping in as soon as the market opened, right? And it just rallied for the rest of the day until around 11 o'clock. So yeah, followed an uptrend for the next 2 hours following these 3 green candles, signifying all these buyers stepping in. And the same goes for the other side. If this was red and buyers were selling or people were selling, you could tell that, there would have been a trend to the downside. You could have easily bought puts at open and made 100% the other direction. And again, like I said, these option contracts, they're not expensive, right? So if we can go back to the chain, right? Like these are $100. This is $40 right here. So we can open this one. Like these opened at $50, right? And ran up to $119. So you only use like $50 and turn it into $100 in what, an hour or two? And like I said before, like you want to have risk tolerance when it comes to options, right? So treat this like it was a regular earnings play like you're doing before. You don't want to use all your bread. Use a certain amount of money that you could play around with and then trade using this strategy. So in the past I've seen plays like this run up 1,000%. Even recently I had a play that I had at $10 that ran up to $70. That's easy 700%. So stuff like this happens, almost daily. You just gotta find the stocks that are flat. It was relatively good or bad earnings, and then you could ride the wave on the way up or down. But yeah, trading like this isn't always gonna be this, straightforward. Target was a good example of this. As you can see, buyer stepped in here, and it ran up the rest of the day. And then we still have time on these contracts, so if you wanted to, you could really just ride these out for the rest of the week. What's today? Today's Wednesday. You still have 2 more days on these contracts, so if Target saw a continuation, you could still make more money from this. So yeah, guys, I just thought I'd get on here and share some of the sauce I've learned in the past year. Give y'all some free game. If you appreciate this, just leave a like and subscribe, and I'll try to make more content for you guys. Thanks.